It's a Thank God Friday, September the 13th, here on Energy News Now. My name is Justina Okechukwu. Global oil demand may be slowing down significantly as the International Energy Agency is predicting a weaker than expected oil demand growth for the rest of the year and into 2025. The Paris-based organization sees demand falling to 900,000 barrels per day in 2024 and by 950,000 barrels per day in 2025, with a slowdown in Chinese demand being the main driver. A new IEA report recognizes the latest moves by OPEC and its allies to stabilize the market, but says the alliance faces challenges in balancing supply and demand amid rising non-OPEC plus production. Crude oil prices climbed on Friday, driven by output disruptions in the U.S. Gulf of Mexico due to Hurricane Francine, which led to the evacuation of platforms before it struck Louisiana. London Brent crude futures rose 0.5%, reaching $72.31 per barrel, while the U.S. West Texas Intermediate crude futures edged up 0.6% to $69.36 per barrel. Both benchmarks are on track to end their weekly losing streak, with Brent expected to rise by 1.7% and WTI by over 2%, despite a midweek dip below $70 per barrel for the Brent. Natural gas prices rose on Thursday after the U.S. Energy Information Administration reported a smaller than expected weekly storage of 40 billion cubic feet, lower than analysts' forecast of 49 billion cubic feet. At current levels, inventories are 198 billion cubic feet higher than last year and 296 billion cubic feet above the 5-year average. As of early trading Friday, the October natural gas delivery is priced at $2.36 per metric unit, indicating a 0.25% increase. The International Monetary Fund says it expects Uganda's economy to experience significant growth due to the upcoming start of commercial crude oil production in the Eastern African country. The Bretton Woods Institution projects a growth rate of 10.8% in the 2025-2026 fiscal year, up from the projected 6.2% the previous year. The IMF highlighted that the growth from the oil production will positively impact Uganda's fiscal and current account balances and recommends continued fiscal consolidation, expenditure discipline, and prudent fiscal management to ensure the effective use of oil revenues. The U.S. Export-Import Bank is considering the potential funding for ENI's Coral North liquefied natural gas project off the coast of Mozambique. This follows an earlier investment in an onshore LNG facility that has faced delays due to security challenges and oppositions from environmental groups. The Coral North floating liquefied natural gas plant is currently listed as a pending project by the Exim Bank, although the financing details will only be disclosed upon final board approval. US Exim Bank has not provided a specific timeline for its decision. Egypt's natural gas holding company has submitted a proposal to raise natural gas prices for factories by 10% to 30%. The request, which will be presented to the cabinet, excludes factories with variable pricing contracts but maintains that prices will rise in the current fiscal year as a result of increased gas import rates. Libya's crude oil exports are projected to decline by at least 300,000 barrels per day in September, despite a modest recovery in production. Analysts at FGE, an international energy consultancy, reports that Libya's crude production has risen by around 200,000 barrels per day since the start of the month, and now standing between 650,000 and 700,000 barrels per day. South Africa's Minister of Electricity and Energy, Hussein Shuramakopa, is looking to set up a committee of experts to evaluate the potential role of nuclear energy in the country's future energy supply. The decision by the Energy Minister was part of the preparation for a possible 2,500 megawatts of nuclear procurement, even as the minister says it will issue a new ministerial determination. A major electricity outage occurred in Senegal on Thursday following an accident at the Han Power Station in Dakar. Senegal's power utility, Senelec, says the disruption, which occurred at the 90,000-volt station, has caused widespread power cuts across the country, impacting businesses and residents. In other energy news now, Singapore-based commodities firm Trafigura Group has highlighted confusion about how much carbon credit airlines can buy to meet their emissions obligations under the Carbon Offsetting and Reduction Scheme for International Aviation. The group's head of carbon trading, Hannah Hallman, noted this concern regarding the scheme, which looks to help the aviation industry offset its emissions but lacks clarity on which carbon credits are acceptable. The uncertainty is causing challenges for airlines looking to comply with their carbon reduction targets. And that's all we have for you on Energy News Now this Friday, and we thank you all for listening. Remember to visit our website at frontierafricareports.com to listen to all the previous editions of the podcast. You can also follow us on YouTube and all our social media platforms. I am Justina Okechukwu. Have an amazing weekend.